Welcome to Eos Loan training. My name is Kevin Kuhl. I'm going to be presenting a slide deck this afternoon that talks about Eos Loan, our company vision and purpose, and also the exciting HomeShare or home equity investment option that we're currently hosting on our platform. We are a solar and home improvement platform for contractors like yourself that are enabling homeowners and contractors alike to expand their options in the home improvement and solar financing space. So thank you for joining me here today. I'm the Director of Sales Enablement for Eos Loan. I'm primarily responsible for new partner onboarding, training, and then ongoing sales support in the field for our certified contractors. I've been in the solar industry for 10 years now. I've done a variety of work for large manufacturers, worked as an independent contractor, and also a seller at the kitchen table for several large national as well as local installers. Part of what brought me into Eos Loan was the fact that we are expanding the options for sellers in the field and providing more comprehensive options that will help expand sales for you guys. So to jump right into what EOS is and our mission, our why is to make homeowners' lives better by providing choices and a more sustainable and affordable form of home improvement and solar financing. The way we're doing this, or how, is unlocking financial options and savings in the solar and home improvement spaces, helping you all do that. Our what, as a credit marketplace, we connect the right capital providers and partners to make it a lot easier for homeowners to go solar and or fund their next home improvement project. Kind of just a look here at our business model. In between EOS and the banks are, of course, the manufacturers, contractors like yourselves, and we are a sales platform. And then, of course, you have the group that we are all here for, which is the homeowner. The options that we currently host on our platform are for residential, solar, and home improvement. We provide access to a fast-growing market, a credit approval process, and assure a quality service that EOS provides. So different capital providers, which can be banks, credit unions. When it comes to our contractor base, we're increasing the amount of options available to you and providing a simple and fast solution for these options. And ultimately, the goal in this is to make your business more productive and to incrementally increase sales revenue. When it comes to the homeowner, we do have the capability to approve homeowners with certain options as low as a 580 FICO score. The homeowner does have the capability with the HomeShare home equity investment option to actually keep the tax credit. Unlike some other solar style loans or home improvement loans that can be combined with solar out in the marketplace, there is no requirement for the homeowner to inject the value of the federal tax credit that they're eligible to receive into a HomeShare option. And of course, we provide a streamlined payment service for our contractors for deals that have been closed through our platform. So just a little bit more context for everybody about EOS. Our solution, again, is to offer a scalable, qualified and targeted origination for financial institutions. We are a one-stop shop platform for contractors, both solar and home improvement. Solar is by no means required for our options. Myself and a large portion of our team do come from a solar background, so we certainly have a personal stake in the solar market, but not at all something that you are required to engage in, or even a industry that you service. We provide end-to-end managed processes from origination to collection with credit and fraud risk mitigation. Risk-adjusted demand and credit supply linked through our proprietary AI technology is another aspect of the EOS solution. We have a solid track record. Over $500 million of proposals originated in Brazil and in the US since 2022, with 1,800 plus contractors and 12 capital providers. The platform came up and running for capital providers, contractors, customers with the AI credit analysis model. Also, a low delinquency rate. So the US solar market payment delinquencies have been lower than other types of asset classes. Only 0.8% for 30 plus days and just 0.2% for 90 plus days. And these are numbers from a publicly traded company as an example, which is quite a bit lower than mortgages as standard. So customers save money by going solar starting in year one. As you'll see here as we move forward, it's possible with this home equity investment that we host on our platform for the homeowner to immediately save the value of their electric bill that the solar system that has been installed is designed to eliminate. So kind of just a look between what many of you are probably already used to in a traditional, usually referred to as a solar style loan. This is a type of financing product that's been available in the US market for quite some time now. The term on that is going to range anywhere on the low side from 7 years up to 25 years. Sometimes even 30 years, typically is between 20 and 30 years as the most common options out there. These type of solar loans are limited in the amount of the dollar value, if you will, of your contract per home. That tends to max out at about $135,000. The market rate for the interest rates or APRs, especially in the last couple of years, has become quite a bit higher since we've seen those increases in interest rates since late 2022. And then also dealer fees have become relatively substantial, ranging anywhere from, a 0% all the way up to about 40%, with the average being between 20 and 35% for the most commonly selected solar style loan options by residential solar contractors. So the traditional versus the new. I mentioned already the home equity investment, which we're really excited about. Also referred to as a home share. This is a property secured type of financing option. Under the right conditions, it's possible for a homeowner to extract up to $500,000 or $500,000. The right conditions sometimes is product dependent, mainly has to do with how much equity the homeowner has in their home. In order for someone to pull $500,000 worth of equity, the home is going to have to be more valuable than the average home in the United States, upwards of $1 million, sometimes even more. This is a 10-year product with the option to renew. So if a homeowner has longer term aspirations for living in their home, then they always have that option to renew their home share agreement at the end of the 10-year term. This is paid back upon the sale of the home. So one thing which we'll kind of talk about in more detail later is there are literally no payments during the term for a home share. No monthly payments, no annual payments. The homeowner does have the ability to make lump sum or bulk payments throughout the duration or pay the home share agreement off early, but they are by no means required to do so. So that's where, if cash flow is the most important thing to a homeowner, they're looking to save the full value of their electric bill in which the solar system is designed, and they want those savings right now when going solar. This is an excellent option for them to consider. There's also no interest in the conventional sense. We will talk about what the revenue is or for the capital provider in lieu of interest, but there is no conventional interest or APR with this product. So let's talk a little bit about who this home share or home equity investment ideally is for, the type of homeowner that's most likely to benefit or at least be interested in entertaining this as a financing option for their solar system. Starting with credit denials, the FICO score, as we mentioned before, that's required to be approved for this home equity investment is quite a bit lower than your standard solar style loans that are currently available in the market. That's going to be a 580 FICO and above in order to qualify. So a homeowner that doesn't have the FICO score of, the low to mid 600s or even high 600s that are typically required by lenders that are common in the solar and home improvement space, this can be a great option for those homeowners that didn't qualify in previous days, weeks, months, or years that you may have come into contact with. Also, debt to income ratio. So debt to income ratio is not analyzed as part of the qualification criteria for a home equity investment. In fact, a home equity investment is not even a loan. So it doesn't get reported to the credit bureau. A homeowner that does decide to move forward with a home equity investment, that will not count against their debt to income ratio. So another alternative is a homeowner that maybe was looking into a larger improvement and they weren't able to finance the full value of that project with more conventional options. A home share can be an excellent choice for someone in that situation. Also, debt averse customers. So homeowners that are inherently just not comfortable with taking on more debt. Maybe it is an issue of debt to income ratio. They've had recent other loans, whether it be an auto loan, personal loan, taken out against their credit. As I said before, this is not a loan. So it does not count against the debt to income ratio and can be a favorable choice for somebody that is debt averse. A homeowner that's interested in immediate positive cash flow, especially for those of you that sell solar, you know how important it is to many homeowners that are exploring solar for their home to see some sort of immediate savings, whether that be 10% lower than their electric bill for a monthly payment for the system, or more. The home share can provide that. And because there are no monthly payments, the homeowner is saving the full value of whatever their solar system was designed for. If solar is not involved and it's a remodel of a kitchen, of a bathroom, exterior work, a new roof, this provides a hedge against having to come out of pocket on a monthly basis as a traditional home improvement loan would. Another type of homeowner, someone that doesn't pay any federal income tax or doesn't have the tax appetite in the first year of going solar to realize the full benefits of the 30% federal tax credit that a homeowner is eligible to receive for going with a solar and or energy storage system. So folks that are on a fixed income, maybe they're retired, maybe their tax liability is just not great enough to absorb the entire tax credit in the first year. This home equity investment can provide some excellent flexibility for someone in that situation. So we talked a little bit about the home equity investment, also referred to as an HEI, or in the case of the capital provider that EOS hosts on our platform currently, a home share agreement. They're also known as home equity agreements and are not technically loans. This is an options contract essentially for cash in exchange for a fraction of the homeowner's equity. The homeowner does have the ability to refinance their HEI into their mortgage during the course of the term or at the end of the term at 10 years if they're not wanting to pay the home share off and or renew the agreement for an additional 10 years. So there's some great flexibility built into this. If it makes sense for somebody at that time to do a refinance, the capital provider can do that as part of this agreement. And again, HEIs have no money down, so there's no money out of pocket. There's no monthly payments or annual payments, no expectation to pay back the federal tax credit or the value of the federal tax credit, and there's no interest in the conventional sense, and it is literally not debt. So will not be reported to the credit bureaus and will not count against the homeowner's debt to income ratio. Continuing with a little bit more detail about home equity investments. These HEIs are currently offered in Texas, Florida, and Colorado by a company called Nada Loans, LLC, who's based in the Dallas-Fort Worth metropolitan area. Their product is known as a HOMESHARE, which is a type of HEI or home equity investment. The homeowner can use this program to have any goods and services related to home improvement, whether that includes solar and or energy storage or not, installed by the EOS certified contractor network in exchange for a percentage of the homeowner's equity. And a note here that lump sum buyback of equity can be made during the term. However, typically it's in the homeowner's best interest to put that money that they maybe are comfortable making in a monthly or annual contribution into some sort of investment account. And this is pretty open-ended. I mean, the homeowner could opt to put that money in a high yield savings account. They could invest it in the stock market, any sort of investment account that the homeowner chooses. That way, if the homeowner does identify that they have a need or desire to sell their home, before selling their home, they can take that money that they were contributing on a monthly or annual basis or some mix thereof and apply that to the balance of their home share, therefore buying back a probably significant amount of their equity and reducing the amount of their homeowner equity that would go to Nada in the event of a sale. So that's a really nice strategy for folks who ultimately are looking to minimize the fraction of their equity that the agreement is for. They do have that ability to make bulk payments to buy back their equity incrementally. So let's talk a little bit about the choices that a homeowner who has entered into a home equity investment agreement has at the end of that term. At or before the end of the 10-year term, the homeowner has the choice to pay off the contract by doing a cash buyout. They can refinance the value of their home share into their mortgage, or they can, of course, sell their house. Paying off the contract can happen by using savings, whether that was money that the homeowner was stashing under their mattress, putting in some sort of investment account, refinancing into the mortgage, or simply they can renew the agreement at the end of the 10-year term for an additional 10 years. To qualify for a home equity investment, a homeowner does have to own a significant amount of their property. The minimum amount of equity that a homeowner can have in order to qualify for a home share is 30%. So homeowner must own at least 30% of their home and have a credit score at or above 580. The funds for the project are dispersed directly to you as the contractor by EOS. So now that we've had a chance to talk high level about what a home share is, how home equity investments work, let's take a look at a case study and actually do a numerical example so that you guys have an idea of how this program might work for homeowners that are considering going solar or making home improvements with your organization. And for the sake of this example, let's just assume that the homeowner owns the home free and clear. So they do not have a mortgage. And this is not a requirement, but just to keep the math relatively simple, we'll say that this homeowner owns the home outright. They have full equity. So then let's say that the home is valued by Nada for $500,000. The home is currently worth $500,000 on the market during the qualification process. So this $500,000 home, the homeowner is looking at, let's say, installing a solar system and battery bank. And the total value of that solar system and battery bank is worth $50,000. That $50,000 for a $500,000 home, that's 10%. 50,000 divided by 500,000, 10%. So that's what the agreement is actually for, is for 10% of the homeowner's equity upon sale or refinance or extension at the end of the 10 years. So the home share is 10% of the homeowner's equity. Now let's fast forward, we'll say 7 years into the future, since 7 years statistically is the amount of time that a homeowner owns a single family home in the United States. So again, remember, this homeowner is free and clear. They haven't, when they entered into the home share agreement, they didn't have a mortgage. The home is totally paid for. So they have full equity. So that 10% that the home equity investment was for, that's not a share, 10%. The homeowner, of course, has 90%. So the homeowner receives a solar system in exchange for the original amount, which was $50,000, plus 10% of the incremental increase to the equity's value when the home sells. Now we're fast forwarding 7 years into the future. The home that in the beginning of the home share agreement was worth $500,000 has now appreciated in value to $700,000. For those of you that are wondering, that's about a 5.5% year-over-year increase for 7 years for the home to get from $500,000 to the current value 7 years later at $700,000. So because the agreement is for that 10% of equity, we would take the current value of the property, $700,000, minus the original value, which was $500,000. That gives us an incremental increase in home value, or in this case, home equity, they're one and the same, of $200,000. So the way we do the math to figure out how much money would be transferred to the capital provider, Nada, would be to take the incremental increase, 10% of the incremental increase, which is $20,000, add that to the original principal of the home share, which was $50,000, and that equals $70,000. So Nada would receive at the sale of the home, in this particular case, $70,000, and then the homeowner would take home 90%, which is $670,000. So the homeowner essentially gained $130,000 worth of equity and made no monthly payments during the course of 7 years for their solar system. Of course, depending on the market, depending on the utility, that's a lot of savings, adds up every month. Huge benefit to the homeowner having realized those savings immediately. And who knows, maybe even taking that money that they weren't paying the utility and investing it in the market or some other type of investment accounts to watch that money grow. All right. So now that we've gone over a case study to see how home equity investments or home shares work, let's take a minute to go over a few things to be aware of. Again, home shares are not for everybody. There are certain types of homeowners that probably aren't going to qualify. Maybe it's not even for their credit score. Usually we see folks being declined if there is a main reason, simply by not having enough equity in the home. That tends to be new home buyers, especially if they recently bought the home, first-time home buyers on FHA loans, probably not going to have 30% equity in their property. So that's kind of the most significant, I would say, qualification criteria is making sure that the homeowner has 30% equity in their property. A home share is not ownership. So the capital provider, Nada, does not go on the deed. They are literally not taking ownership of the property. So that can be an important point to make to homeowners that are considering this as an option for going solar or making their home improvements, is that they are not literally giving up ownership of their property. They're entering into an options agreement for a certain fraction of their equity for when the home sells. So there is an origination fee, like many other property secured type of transactions, like a mortgage, like a home equity line of credit. The difference is this is a much faster process, compared to those other property secured type of transactions. But it is similar in the sense that there is a small origination fee. So that's going to be 3%. Additive on top of whatever your contract price is. There's also some closing costs affiliated with this. That amount will depend, on the situation, the home itself, the market. The average that we see is around $2,000 to $2,500 per project. So it's fair to tell a homeowner that whatever your contract price is, they should expect the total value of their home share to be about 3% more than that, plus closing costs, which tend to be around $2,000. And this will be disclosed to the homeowner by Nada directly during the qualification process. It's important to note, however, that the homeowner is not required to come out of pocket to pay that origination fee and or the closing costs. Those additional fees simply get rolled into the total value of their home share. And that's what Nada is going to use to make the calculations about what fraction of their equity the agreement is for. The homeowner can choose to buy back equity, making lump sum payments. An example of that is the federal tax credit. So again, a homeowner that's interested in reducing the fraction of their equity that the agreement is for, they might opt to, save up and take the savings that they didn't pay the IRS because they went solar and make a bulk payment, equaling about, 30%. That is an option for them. This is a second position lien if the homeowner has a mortgage that is placed on the home by the capital provider. And it's important to note that unlike a mechanic's lien, unlike, and maybe a home equity line of credit where there's a required monthly payment, there are no payments on this. So there has to be some way for Nada to earmark the fact that this agreement exists. And they do that by taking second position to the mortgage holder. So when the home does sell, there's a reminder that this agreement is in place. And before the homeowner gets paid out on their share, Nada gets whatever their share of the equity is. Nada does want to protect their investment. So in the event that a homeowner has HOA fees that are outstanding, property taxes maybe that have gone unpaid, other mechanics liens that are on the property, all of those things can be rolled in to the home share agreement. Let's just say we have a contract for a $20,000 metal roof, and the homeowner has some outstanding property taxes that they owe, maybe some HOA fees, and let's just say that totals $5,000. Nada can help the homeowner, or with the permission of the homeowner, simply roll those outstanding taxes and fees into their home share, and then their home share would be worth approximately $25,000. The homeowner does have the ability to request additional funds above and beyond your contracted scope of work, and have those additional funds sent directly to them. An example of this might be a homeowner that has some credit card debt and maybe wants to pay that debt off using equity that they extract from their home. Doesn't have to be credit card debt. Could be, investment in some type of equipment for their business or whatever is outside of your contracted scope of work. as an EOS certified contractor. So that is a unique feature of these home shares, is the homeowner's ability to extract additional equity out of their home so that they can have cash sent directly to them. Lastly, there is a home inspection as part of the process. As you're probably realizing, this is an investment not only for the homeowner, but also for the capital provider in Nada. They want to make sure that the home is in good condition before they close or have the homeowner close on their home share. This is primarily to find deferred maintenance issues. So big glaring issues with the home, foundation repair, a new roof being some of the most common items. If we do see requirements for closing, it's typically one of those two things. And this is a potential upsell opportunity, for those of you that so have the ability to subcontract, these type of services, or maybe even perform these services yourself. We, EOS, will give you, our certified contractor, the first right of refusal if it is determined that an additional scope of work is needed to fix up the home for the homeowner to be eligible to close. All right, so now that we've talked about how home share works, let's talk about pricing and how to price your installation agreement, and then how to at least give a rough calculation of how the total value of a homeowner's home share will be calculated, in the interest of you being able to set proper expectations with a homeowner that's considering this as a way forward for their project. So let's assume you were able to sell your project goods and services at $27,000 cash if the homeowner was paying cash. The way you would calculate the 10% EOS dealer or platform fee would be taking your cash price and simply dividing by 1 minus that 10%, which is 0.9. So that gives you, for this example of a $27,000 cash price, a contract price of $30,000. You'll see this labeled in our platform when you create a record for a homeowner to start the qualification process as financed amount. So think of the financed amount as your contract price. That's what you're writing the homeowner up for, and of course includes the dealer fee. So that's $30,000 in this example. The way to find the total value of the home share, and Nada will provide this directly to the homeowner during the process, but just so that you have a ballpark and can set the proper expectations with the homeowner, you're going to take your contract price of $30,000, add 3% by multiplying it by 1.03, that's the origination fee, and then adding approximately $2,000 to account for the closing costs. Remember, those closing costs are not to be expressed in a percentage, because a larger contract price will call for a smaller percentage, or that $2,000 or $2,500 would be a lower percentage. So keep that in mind, and remember, about $2,000, but it can be more or less depending on the exact circumstance. So in this example, that gives us a total home share value of $32,900 once the origination fee and closing cost estimate has been added to your contract price. All right, so let's talk a little bit about what is required for a homeowner to qualify for a home share. Starting with FICO. A lot of you will probably see this as relatively favorable, especially compared to other options that you might be used to selling with other lenders. So homeowner needs to have a 580 or higher FICO in order to qualify for a home share. Maybe the most important factor for qualifying is the amount of equity that the homeowner currently has, or the amount of equity that they have at the time they're applying for a home share. That must be 30% ownership or 30% equity in the home. The value of the home also needs to be $200,000 or more. That is the value currently on the market, not how much the homeowner purchased the home for. So if you're working with a homeowner, maybe they've lived in their home for several decades, and they purchased the home for $60,000. That's not what is important. Rather, the current market value of the home just needs to be $200,000 or above. Also, the home cannot be a mobile or manufactured home. And a good way to check this is to go on a public automated valuation model such as Zillow or Redfin. Those are just a couple examples. And if the property type is listed as mobile manufactured, unfortunately, that home will not qualify. Also, the homeowner cannot have filed for bankruptcy in the past 12 months or have resolved a bankruptcy in the past 12 months. When it comes to mortgage payments or late mortgage payments, the homeowner does need to be current on their mortgage in order to qualify for this program. They are allowed one late mortgage payment as long as their credit score is 580 or above. But any more than one late mortgage payment in the past 12 months, unfortunately, will knock the homeowner out of contention for this program. Let's go ahead and talk about the step-by-step process involved in. So now that we have a good idea of how the HomeShare product works and what the value is for your homeowners, let's take a look at the step-by-step process. It all starts with the project being created in the EOS platform. So entering the homeowner's basic information, first and last name, address of the home, email address, phone number, and then the financed amount or contract price into the platform. Once this has been done, the homeowner is going to receive an email. That email comes from EOS team and is titled Terms, Conditions, and Privacy Policy. This is essentially letting the homeowner know that EOS is not selling their information or putting their information online. It's just simply EOS passing the homeowner's information to the capital provider so that the capital provider can qualify your homeowner for a home share. So once the homeowner has accepted that terms of use from the email that they get from us, you're going to have them call 833-463-6232 to speak with an equity specialist directly. This is an important step because the equity specialist at Nada is a certified broker and knows how these home shares work and can actually value the homeowner's property. So they're going to give them a value for their home. They're going to answer any questions that a homeowner has about the program, hypotheticals, and also give them a percentage for what of their equity for what the agreement would be for. And that is a soft credit check. So important to keep in mind, like most other lenders in the home improvement and solar space, this is not a hard inquiry. So a homeowner agreeing to have that call will not affect their credit score and will not obligate them to move forward. So once the homeowner has been qualified by the equity specialist at Nada, if the homeowner agrees to the terms and in theory and gives Nada or expresses intent that they want to move forward, the homeowner will be told which documents Nada needs in order to move things forward and send them disclosures for e-signature. The homeowner signing these disclosures is the homeowner giving Nada intent to proceed. That is a hard inquiry. So like most other loans, the signing of these documents will result in a hard credit inquiry. Those disclosures being signed also give Nada the capability to open title and order a full title report on behalf of the homeowner. After title comes back, assuming that it's clean and there aren't any outstanding issues that need to be addressed with the homeowner, Nada will schedule a home inspection or help the homeowner schedule a home inspection. If there are issues on title, Nada will discuss these with the homeowner and give them the next steps of what they need to do or what they need to consent to in order to move things forward. So once the home inspection has been scheduled and has come back clean, Nada schedules the homeowner for their final closing. This is known as final review and is done by the underwriting team at Nada. If there are issues with the home inspection and there's major deferred maintenance issues that are discovered, Eos will inform you as the contractor of these items. That way you can go back to the homeowner and decide whether or not you want to take those things on, or if you and the homeowner would prefer that Nada send the homeowner additional cash to take care of those items themselves. And then finally, we have closing. So all the documents have cleared and the processor schedules the homeowner for closing. And then that's a closed deal. That is what will enable Eos to make the first milestone payment to you as the contractor. All right, so now that we've gone through step by step how the process works in qualifying a homeowner and getting a homeowner through the process for their home equity investment or home share, just a few notes about this type of financing product. Different types of loans and products are more or less regulated. You know, this type of asset class being a property secured type of transaction does have more regulation. So gathering the homeowner's information and inputting it into the Eos platform, of course, is perfectly acceptable. The homeowner needs to confirm, as we talked about, the terms of use that come to them in that email from Eos. It is not acceptable for you as a sales rep to have the conversation with an equity specialist without the homeowner present or on behalf of the homeowner. It is acceptable, and Nada will ask the homeowner's permission, you know, if you as the seller are either at the kitchen table, physically present in the home, or doing a virtual or phone consultation, to be you as the seller to be part of that conversation. Just know that Nada will most likely ask the homeowner's permission. That way you can be there to answer any questions that the homeowner might have about your scope of work. The equity specialist will take care of providing the homeowner with answers about how the home share program works, and then of course giving them a value of their home and a value for their home share agreement. General concepts are perfectly acceptable when it comes to talking to a homeowner about how an HEI or another real property secured type of transaction works. Clarifying acronyms with a homeowner, perfectly acceptable. Just be careful not to make any promises about what the total value of the home share is going to be, because remember, closing costs do vary based on the homeowner's situation. Reviewing concepts and even using illustrative examples for a home share, such as the calculator that Eos has built into our platform, this is acceptable. The conversation, again, between a homeowner and an equity specialist must be had by the homeowner. This is not something that a salesperson can have a conversation with an equity specialist about on behalf of the homeowner. Homeowner must have this conversation and provide their information directly to Nada. I think this goes without saying, but never deceive or mislead a customer about their options. Eos is in the business of transparency and working with contractors that are honest and straightforward. If there are questions a homeowner asks that you do not know the answer to, or you get the sense are more for an equity specialist, please do defer those to the Nada equity specialist so that the homeowner can get a direct and concise answer during that qualification call. All right, so let's go over some frequently asked questions about the HomeShare program. So what is a home equity investment? HEIs are also called sharing agreements. Instead of borrowing against the value of the home, you can choose to option a portion of your equity using an HEI. As far as how much money can a homeowner get, this is going to depend on how much equity the homeowner has and what the value of their property is ultimately. It is required by law that a homeowner is left with at least 20% of their equity. So, for example, if I own my home outright, let's say my home is worth $500,000, meaning I have $500,000 worth of equity, I would not be able to extract 100% of that. I would legally be required to be left with 20% of that 500,000. Most home share agreements are capped at 150,000. We get into some of the special circumstances where a home is extremely valuable, where it can go beyond that. But generally speaking, these agreements are capped at $150,000. As far as what the funds can be used for, really any type of home improvement. So solar, batteries, roofing, exteriors, interiors, even landscaping, if that's what the homeowner is interested in having done to their home and using this program for. Any type of homeowner or any type of home improvement. There's not a requirement for solar to be involved. If solar is involved, there's no requirement of a certain percentage of the agreement to be solar versus a roof versus other type of home improvements. The homeowner does have the ability to request additional cash be sent directly to them, perhaps for debt consolidation, paying off other loans, or rebuilding their savings account. All right, some more frequently asked questions. How much are the monthly payments for a home share? Well, there are no monthly payments, simply. As far as how much does this cost? Closing costs will vary, based on the situation. There is that origination fee of 3% that's additive to whatever your contract price is. And closing costs average about $2,000. Can be more, can be less, depending on the circumstance. We'll be able to give you, or Nada will be able to give your homeowner a much more accurate estimate when they have that qualification call. Can a home share be paid off early? Yes, there are no penalties for exiting an agreement early. Nada will help by offering deeply discounted refinance options and real estate services. So again, no prepayment penalties for paying a home share off early. Who owns the home? The homeowner always retains ownership of the home. Nada does not go on the deed of the home. So this is literally not ownership or Nada taking ownership of the homeowner's property. A home share is represented as a secondary lien to the primary on the home. What happens if a homeowner sells their home? Nada will offer deeply discounted real estate services in many locations. So it's best that the homeowner check with Nada first before they sell their property to see what their options are, or if they're looking at refinancing. The homeowner can order a payoff on a home share, just like a mortgage payoff, which would be handled by the title company at closing. So what happens then if a homeowner doesn't want to pay this off within or at the 10-year mark? You've got options. Homeowner has options. There are 3 options at the end of the 10-year term, and Nada will help the homeowner with whichever option they choose. If the homeowner is not selling the homeowner has the option to refinance. They can pay the home share off, or they can renew the agreement with Nada for an additional 10 years. So flexibility is part of the attractive feature that these home shares offer. How does a homeowner know if they're eligible? Home shares are generally available for candidates with a 580 plus FICO score and homeowners that own at least 30% of their property or have 30% equity in their home. The homeowner can contact Nada by going into the EOS platform, creating a customer record, having that homeowner accept the terms of use, and then having the homeowner call 833-463-6232 to get qualified by an equity specialist at Nada for their home share. Now, as far as what documents are required, any homeowner that makes the decision to move forward with a home share, they will be required to provide the following. That's going to be a copy of a government issued photo ID, so typically a driver's license or a state ID, a passport would work, a current copy of their mortgage statement, proof of homeowner's insurance. The declaration page is what's most common. If the homeowner wants to send the entire policy, that's fine as well. Proof of income or a Social Security awards letter if the homeowner is retired and no longer actively receiving income. The proof of income could be a 1099, a W-2, several months of pay stubs, or at least 2 months of bank statements. A copy of a Social Security card. If the homeowner does not know where their Social Security card is, a Medicaid ID card could work. Any government issued document that has the homeowner's Social Security number on it will typically work for this requirement. And then finally, the signed disclosures that Nada will send via DocuSign after the homeowner has been qualified and expressed intent to proceed. And a reminder to everybody, if you are using a tablet or mobile device in the field, EOS does have an app available for both Android and Apple users. So please find that app is EOS Loan or EOS Loan in the Apple and Android marketplace. This gives you quick access to being able to enter customer records and track the progress of homeowners that you've submitted into our platform in a convenient way. You can, of course, use the web version, which you would access by going to www.eosloan.com and simply hitting login in the upper right-hand corner. But please do download the app if you find that more convenient. I'm here to support you and make sure that you're successful in training your sales team on how to wield the EOS platform and the home share product in the field. So again, thank you for your time. Looking forward to working with each and every one of you. And you can email me at kevin.cool@eosloan.com or text and or call me at 512-595-6707. Looking forward to having some wins with you guys with this program. Thank you again for your time and have a nice day.